For years, there's been this massive wall between traditional finance and the world of cryptocurrency. But that wall, it's not just cracking anymore. It's actually being torn down by the very same institutions that built it. So today, we're going to dive into how Wall Street is finally, and I mean really rapidly, embracing crypto.
And that leads to the big question, right? Is Wall Street really going all in on crypto? I mean, for so long, crypto was the rebellious outsider, but now you've got the giants of finance making these huge moves that suggest, a fundamental shift is happening. Let's dig in and see what's really going on.
I love this quote from Eric Balchunas because it just perfectly captures what's happening. He says, crypto is being absorbed into Wall Street's plumbing. And just think about that for a second. We're not talking about some new, shiny product they're putting on the shelf. No, this is about integrating it into the actual pipes, the core infrastructure of the whole financial system.
And maybe the biggest sign of this integration comes from a place you might not expect. JP Morgan Chase, one of the largest, most influential banks on the entire planet. So let's break down exactly what they're up to with their groundbreaking new service.
Okay, so at the heart of all of this is a concept called crypto collateralization. And in simple terms, it just means that big institutional clients can now take their Bitcoin and Ethereum, pledge it as security, and get a cash loan. Now, this is huge. Why? Because it lets them unlock the cash value of their crypto without having to sell it. It turns a static asset into a really dynamic financial tool.
The process itself, it's actually pretty straightforward and honestly looks a lot like traditional lending. You see it here, a client pledges their crypto, the bank secures it, and boom, the client gets a loan. The revolutionary part here isn't really the process, it's the asset being used. By treating Bitcoin and Ethereum just like any other valuable collateral, JP Morgan is giving them this incredible new level of utility and, frankly, legitimacy.
And this slide right here shows you the real leap forward. I mean, just a few months ago, the big news was using shares of a Bitcoin ETF as collateral. That's kind of like a proxy for the real thing, right? It's one step removed. But the new way? It's way more direct. They're using the actual Bitcoin and Ethereum tokens themselves. That shows a much, much deeper level of trust and integration.
Just look at this timeline. It shows a truly dramatic acceleration. Back in 2022, this whole idea was put on the shelf. Then, just a few months ago, they were only testing the waters with ETFs. And now, the plan is a global rollout of direct crypto loans by the end of next year. The speed of this turnaround, from total skepticism to full-on adoption, is just incredible. So JP Morgan's sudden speed up isn't happening in a vacuum. It really makes you ask the question, why now? What are the powerful forces that are pushing the entire industry to move this fast?
It's really a perfect storm of factors all coming together at once. As you can see here, the approval of those Bitcoin ETFs was like the starting gun. It opened the floodgates for a massive wave of institutional money. You combine that with public perception getting better, a friendlier regulatory mood, and suddenly you've got this huge surge in demand that Wall Street just can't ignore anymore.
And John Glover, the CIO of Ledn, he just nails it. He says these things have massively legitimized digital assets, and that's the key word right there, legitimacy. In the eyes of the financial world, crypto is moving away from being a purely speculative gamble and becoming a recognized, legitimate financial instrument.
Okay, but we need to be clear about something. While JP Morgan is a huge piece of the puzzle, this is not just a JP Morgan story. Their move is a massive signal, sure, but it's part of a much bigger ripple effect that's shaking up the entire industry.
The reality is, this has turned into a race. All the major financial players are now scrambling to build out their crypto services. Nobody wants to get left behind as all this institutional money pours in and their competitors start getting a major head start.
I mean, just take a look at this list of absolute heavyweights. Morgan Stanley, BNY Mellon, Fidelity, State Street, they are all building out the essential infrastructure. We're talking things like custody, which is basically providing super secure storage for digital assets, and dedicated trading desks. This isn't just about dipping a toe in the water, it's a full-on systemic build-out across the entire industry.
So let's zoom out. What does this all mean in the long run? What happens when crypto stops being an outsider and gets fully absorbed into the core of the financial system?
To really get the scale of the impact here, just look at this number, $4 trillion. That's how much in institutional assets JP Morgan manages. So when a player of that size makes a move this big, it doesn't just create ripples. It creates tidal waves that are felt across the entire global economy.
So, if there's one thing you take away from all this, let it be this. The line that used to separate traditional finance from digital assets, it's blurring so fast, it's basically disappearing. What was once on the fringe is now being hardwired directly into the core.
And that leaves us with a really crucial final question. As crypto gets plugged into the financial plumbing, is it making the system stronger and more efficient? Or is Wall Street just inviting in a whole new volatile kind of systemic risk? Honestly, the answer to that question is going to define the next era of finance.